everyone, my name is Aarti and you're watching HW News. Filing ITR is like the most greatest task for any middle class salaried person, and I speak of my own experience. Calculating tax, deductions, rebates, and filing your own income tax. Once you understand it, you may not find it that difficult unless you have, say, multiple income sources and investment, that it is very tedious for you to keep tab of each and everything. But since filing income tax is such a big task for us, middle class salaried persons, whenever the budget is presented, all the eyes are on the part where the finance minister announces income tax rates. This year, the budget brought some good news. The non-taxable income limit was extended to 7 lakh rupees from 5 lakh rupees, which means if you have annual income of 7 lakh rupees, you won't have to pay any income tax. Well, but there is a catch, and that has got everyone confused these days. Since the budget announcement, there is one question that I have heard my colleagues, friends, and family members ask. And the question is whether I should go for the old tax regime or the new one. This is a big question in front of everyone. Now, Finance Minister Nirmala Sitharaman, while speaking in the Parliament yesterday, said that the new tax regime will leave higher disposable income in the hands of the people. Replying to a query of a member who had cited figures about tax saving from the old tax regime, she said saving 4.5 lakh rupees from an income of 9 lakh rupees will be effort-ridden exercise henceforth. She said, since the enhanced rebate limit is unconditional, it leaves higher disposable income in the hands of people. But is it so? Well, the answer is intricately linked to which regime of tax benefits you the most as per your income bracket. Well, we will have a separate and more detailed video on that topic, but for this video, we are giving you a brief overview of the matter, and possibly we will also try and answer the question whether opting for new tax regime will really leave you with higher disposable income. But before that, if you're watching this video on YouTube, please make sure you subscribe to our channel, you like this video and you comment below it. If you're watching this video on Facebook, then please do like our page and share this video to as many people as possible. Now, the new tax regime was launched by the Finance Minister Nirmala Sitharaman few years back with the aim to reduce complications in the filing of income tax returns and simplifying the entire process. However, the new tax regime was kept optional. The taxpayer was allowed to choose either between the old regime or the new regime to file tax based on his convenience. This time, however, in the budget, new regime has been made a default system, and on your request, you can avail the old tax regime. Under the new tax regime, Finance Minister announced no income tax will be levied up to annual income of 7 lakh rupees. Over and above that, you will have to pay tax under various tax slabs. Now, the new tax slabs are as follows. If you have income between 0 to 3 lakh rupees annually, that is gross annual income between 0 to 3 lakh rupees up to 3 lakh rupees, then you will have no tax. Above 3 lakh up to 6 lakh, the income tax slab, the income tax rate is 5%. Above 6 lakh up to 9 lakh, the income tax that will be charged is 10%. 9 lakh to 12 lakh, 15% income tax you will have to pay. Between 12 to 15 lakh, you will have to pay 20% of the income tax, and above 15 lakh, you will have to pay 30% income tax. Now, the new regime has also allowed 50,000 rupees as standard deduction. So, if you are earning up to 7.5 lakh rupees annually, considering that 50,000 is standard deduction, your remaining income is 7 lakh rupees, which is not under any taxable limit. So, you will not have to pay any tax. So, for those with income up to 7.5 lakh rupees, new tax regime is the best option. But that also means if your gross annual income goes up even by just 1 rupees above this limit, you will have to pay tax according to the tax slabs explained above. For those who have annual income above this threshold might have to pay more under the new regime as compared to the old regime. For example, if an individual has gross salary income of 9.5 lakh rupees, He or she would have a lower tax liability under the old tax regime so long as the exemptions and deductions allowed under the old regime are at least 2.87 lakh rupees. Similarly, for individuals with gross salary income in the range of 15.5 lakh rupees to just about 5 crore rupees, the tax liability will continue to be lower under the old regime if the exemptions and deductions are at least 4.25 lakh rupees. Now, for those who have annual gross income above 5 crore rupees, since the surcharge is lower in the new tax regime, that is 25% as compared to 37% earlier, it would appear that new tax regime is better, but depending upon how much deductions can be availed by you. So overall, we can understand in these simpler terms that if you have income below 7.5 lakh rupees and above 5 crore rupees, one might prefer new tax regime. But for those who have income between these higher and lower limits, old tax regime will be more beneficial. Now, many deductions that one was able to claim under the old tax regime may not be able to do so in the newer one. So, depending upon how much investment you have made, how much HRA deduction you avail, your disposable income at hand will vary. So, what do you think? Which tax regime leaves more disposable income in your hand? Do let us know in the comment box below. For more news and updates, you can log on to www.hwnews.in.